Hey everybody, Jay Lagan here with Capital Navigator. I want to jump into agricultural ETFs, and what we're going to look at is the company Tecurium. They have a number of ETFs, and it's a godsend because Barclay pulled all of theirs very recently. So hopefully Tecurium is going to continue building some. Hey Tecurium, if you're listening, I'd love a cocoa ETF, but let's look and see what we got going on, right? So if we look over here at the ETF DBA, what we can see here is a clear downtrend. There's really nothing attractive here. You can say, hey, Jay, man, we talked about energy recently. That was really hot. The gasoline play is great. The natty gas producers looking good. Why are we talking about commodities in an agricultural sense when DBA looks like this? Well, let's look at what DBA actually holds, right? So for me, when I look at it, I'm highlighting here a couple of the key plays. You got sugar, which is the largest percentage here. Then you got soybeans and corn. These are in descending holdings. One that I don't have highlighted here is wheat, and that today made a 7% move, just about. We got to look at these and see what's going on, see if we want to take anything here. So no holding back here. I hold Cane. I bought in on the breakout, loving the trade. It had a pretty significant drawdown, but it maintained the rate of trend. I couldn't have been happier. And on top of that, if you pull a retracement from the top to the bottom, it's already pulled up a 2/3 retracement, moving higher. There's something here that I feel like Cane or sugar could rocket higher, and I'm glad I'm in the trade. And if it breaks out above that, it might be a point to add to that position. Now, if you look at soybeans, right, this one is getting ready to break into a new all-time high if the trend continues, okay? If it doesn't, I can't predict that. But right now, it's testing all-time highs. That's exciting. And so if we got cane doing really well, we got soybeans doing really well, you kind of wonder why DBA looks the way it does. And I think it's because it's diluted with treasury bills. Those haven't been the greatest looking charts. I don't know which time duration the treasury bills are, so we're not going to dive into that. But when we look here is we say, hey, if DBA is not working, but we're seeing things work in sugar and soybeans, and later you're going to see wheat looking pretty good too, we might need to be more selective in the positions we take in this area. So next one, we're going to jump into corn. Now, corn did a head fake. It broke out of the trend. We were all really excited, but look at that. It then registered that lower low, not what we like to see over here. And so right now with corn, we're going to take a back seat. We're going to watch this. But the next one's exciting. Everyone's seen the headlines with Russia pulling the grain contract from Ukraine. And this chart says a lot. It says that we broke that trend line, right? We broke that downward trend. We've registered a higher high out of the trend, right? And then we registered a higher low. Now, what we really want to see is breaking above that previous high, and then it's off. Wheat moved up nearly 7% today. Okay, so it is eyes on for wheat, eyes on for sugar, eyes on for soybean, and we'll give corn a chance, see what it does. But DBA is just not holding it. It's not the trade we're looking for. Hey, I hope this is helpful. Follow me over at Twitter @TheDisruptor. Cheers, y'all.